morning, everyone. It's a pleasure to be with you today. My colleagues Rob Sutherland and Jason Trainer and Nick Callback would join us from time to time over the day. Malcolm Dimon is also with us, making sure everything runs smoothly. For our first panel today, we have, which we'll talk about Proptech. We have the pleasure to have with us Mrs. Courtney Cooper, Principal at Alate Partners, Mr. Jordan Ross, CIO at Voxtur Analytics, and Joseph Nakhla, CEO at Proptech. Please feel free to cut us at any time through the chat with questions, and Malcolm will help us on that front. So thanks to the three of you for being with us today. It's a real pleasure to talk Proptech at a real estate conference. Maybe I'll jump right in. Maybe for the first question, I'll turn to Courtney, and we'll do a quick roundtable on the question. Generally speaking, Courtney, what do you think are the new technologies that the investment community should be focusing on today? And in your case in particular, where do you see the capital flowing today? And what would be your perspectives on where the capital will flow or should flow, call it over the next 12, 36 months?
Thanks, Fred, and thanks for having us. So I think I invest at the earliest stage. So, seed, Series A companies that have a team, have a product, and have, some customers typically, but quite early compared to the rest of this investment community today. I think what's exciting about real estate is that in general, it's been, in the past, a little slower to adopt technology, but we've seen that significantly changing over the past 5 to 10 years, and more technology specializing and become vertically focused on real estate. So I think in terms of this community and what real estate owners and investors should be looking at is sort of some of the maturing trends. So I think we're talking a lot about, how do you actually use data in businesses? Now it's becoming a lot easier to manage data and provide more transparency and collaboration. And so we're seeing a lot of tools that are adopted that bring things out of Excel, that start to integrate between different systems, just automation in general. And as we do this and get more of the information and sort of the raw data accessible, then we're starting to see real applications for AI and machine learning, which essentially should just help people do their jobs faster and make decisions with more information, and take away a lot of the manual entry and finding things, so people can get access to more information and spend more time on the things that they like to do. So I think that and that what that looks like in reality is being able to access data around investments in a much easier format, being able to actually start to get recommendations from systems. So not necessarily telling people how to do their jobs, but just getting more information at your fingertips, and then being able to reduce a lot of the friction. So when you're dealing with lenders and general contractors and subs, how do the information and money flow in a lot more seamless ways. So, I think that's the companies that start to, there's a lot more mature companies that are helping with that productivity and marketplaces and things like that we'll see funding towards, and some of the larger fundings that this group might notice. We are also seeing more and more use cases for AR and VR and 3D printing. And, we're going to talk more about blockchain on this panel. So I think there's, some of the newer technologies we'll see at the earlier stages, and we'll start to see some specific applications. But I think in this group, we're starting drones, things like that. They're still just, for the most case, on the earlier stages.
Oh, very interesting. Joseph, do you want to comment a little bit on how you see new technologies in the future that could affect your business? Maybe both on the offering side, but also on the competition side.
Yeah, absolutely. I think Courtney gave a great overview of what we're also seeing. Our company Tribe really focuses on how people live in communities residentially, whether it's through their condo community or their could be a REIT owned or an asset owned by a third party as a rental community. To build on that, obviously from a Proptech point of view, significant amount of capital over the last 10, 15 years went towards what I call the transaction, which makes complete sense. There's a lot of friction, and many will argue too many third parties in the middle of the transaction, especially a real estate transaction. So you can see, obviously, technology can play a role in reduction of the cost, friction, and speed, and improving speed of those types of areas. And that also went in how you list a home, how you list a unit, a rental unit. So we've seen a lot of investment there. And we've also seen a significant amount of capital that went towards iBuying. And I'm sure many people within our audience have very strong feelings about that. One of the more unique, interesting areas I've always wondered about why there hasn't been enough investment into, and I think we're seeing more and more of capital being allocated there, is really how people live in communities. We all know how people live in a single family home, but it gets exponentially complicated once you start living in what we call vertical villages, 500-600 homes in one community. There's a significant amount of data, significant amount of workflows that have to be addressed, and we're seeing more and more of this untapped, underserved area showing up. And that also includes a significant amount of carbon footprint reduction initiatives that have proven to be very difficult. It's one thing to introduce technology to a single family home. It's another to introduce it to 400 or 500 families in one community. So I'm looking forward to touching on that as well.
Very interesting. Jordan, you guys at Voxtur put forward a very ambitious business plan. And I don't want to touch blockchain. I know all of us want to discuss blockchain right away, but let's put blockchain for now on the sideline. Could you expand a little bit on what you're trying to do at Voxtur, and more specifically, how you're trying to incorporate some features from artificial intelligence, and what should we be expecting from you guys for the second half of this year?
Yeah, for sure. So just to level set here, at Voxtur, we're modernizing, digitizing the whole mortgage lending space. More specifically, what I mean is what we do is we've got a bundle and a platform that our bankers are using to transact in a more modern way. They're doing due diligence on the physical asset obviously being the home. Right. And so we've taken a very strong thesis and a view and put a lot of investment into modernizing this traditional process. Courtney alluded to real estate being a slow adopter of technology. That's actually true. I think the one positive maybe that came out of COVID was the acceleration of the adoption of technology, a more modern way of doing things. For instance, while there was, mortgages and in this low rate environment and refinances going on, were going through the roof, there was still, banks were still requiring inspections and updates of home. Well, how were you able to do that while there were stay-at-home orders in place? Right. And so we've got technology, whether it was putting mobile technology in the hands of a homeowner that was able to submit and update conditions of homes, right? Whether we are leveraging, and with the veracity of data and the quality of data significantly improved than, even only 5 years ago, we were now able to automate a valuation, right? There was things like that during COVID that we had thankfully, and we equipped our clients with to continue to do their business, especially when they were, drinking out of a fire hose with that low rate environment. They could not keep up with the amount of demand and volume that they were experiencing. So it's that type of thing that we are leveraging OCR technology, which is, basic for, in layman terms, being able to read documents, not necessarily requiring a human to read documents, right? Leveraging, allowing an appraiser in the comforts of their home to tap into our platform to do a valuation, which is required by the bank, right? And so we're really automating that process for the banks, and it's doing due diligence on that asset. So the two primary factors that go into doing diligence on that home is obviously a valuation, what the home is worth, and confirming title that the person, there's no liens, and that the person that is making the application actually owns the home and it isn't encumbered by various other things, right? And so we've done some really innovative ways that now, instead of having to acquire a traditional title policy, we're now putting the data in our platform in the hands of a lawyer to sign off and confirm title at a fraction of the cost. We're only able to provide that type of, alternative, much cheaper solution due to the veracity of the data, right? And so now homeowners are paying, for a better, cheaper, faster solution, for a process that traditionally could take, especially in the US, which is the primary bulk of our business, instead of taking 3 weeks to up to 6 weeks, we're now doing it in potentially 3 days to 10 days. Right. And so it's that type of thing. And ultimately, what are we talking about here? Include, with Joseph's offering, and I'm sure what Courtney's looking to invest in, we're trying to make home ownership more affordable. Right. And it's using technology, whether it's automation, OCR, ML, machine learning type technologies that are allowing us to do that. Right. And so again, at Voxtur, we're doubling down and have made significant investments in looking how to automate that entire process.
That makes total sense. And now to my next questions in terms of new technologies, Jordan, now that I have your attention here, do you want to expand a little bit on the next step, which could be kind of an inclusion of some blockchain technology within what you're trying to do?
Yeah, for sure. So, along that lines of trying to automate this process, right? And less touch points, right? Not having a single source of failure, right? Not relying on that one person. Again, from our perspective, the way we define blockchain, it is not crypto, right? So, we can remove, there's no tokens necessarily, right? We're not trading based on a separate cryptocurrency. What we're talking about when we talk about blockchain within Voxtur is a more of a decentralized solution, right? And not creating a single source of failure. And so and then ultimately, we're looking at steps in the process in that mortgage life cycle, everything from purchase to, in the US, which is a lot more prevalent, default. And then ultimately as well, what we refer to as the secondary market. There's a lot of trading of loans, which is very different than the Canadian environment. There's hedge funds, there's large banks that are trading securitized portfolio of loans, right? And so what that all alludes to is everyone's looking for an auditable solution, so that they, in the event of an error or an issue or an obstacle, that they can go back at a point in time and see that. And that's what we believe a blockchain solution solves for. It's creating an auditable property record for us. And where we've started to invest in the blockchain or a decentralized solution is where people can now trade portfolios or properties in a very automated way. Why can they do that? Because they have a fully auditable record, right? Whether it's a valuation, whether it's a transaction, whether it's a refinance, whether it's a home equity line of credit, which we're seeing a lot, or secondary mortgages that are being put on properties, right? To deal with the increase in inflation. People are trying to take some of the equity out of their homes in order to account for this type of inflation. And so we're seeing a lot of demand for those for our services to create an auditable record, to create a seamless transaction. Because in our view, some people look at real estate in general as an investment and they go, oh, high interest rates, you're an interest rate type company. No, that's not necessarily real estate. Any change for at least Voxtur is good, because that's driving a lot of, whether it's an overvaluation and undervaluation.
Velocity.
Yeah, velocity, a correction that needs to be happened. So, this high rate environment doesn't change for us. It's actually an opportunity. And I think, my fellow panelists will also say, in these times of change, it actually tells people to sit back and evaluate what are better alternatives, right? What else is out there? Because when times are good, people, there's little incentive to change. So coming back to your question, Fred, where we're investing in blockchain is creating that decentralized auditable property record. So the big hedge funds that are buying these portfolio of loans are able to do that within seconds, as opposed to, weeks.
Mm-hmm. Could we see initiative on that front in particular at Voxtur maybe in the beginning of next year, or you don't want to speculate on the question, which is a totally unfair question, I know.
I think our process starts with the basic question of buy, build, or partner, right? Clearly Voxtur's story has been fairly acquisitive because we've gone through the math and we said, what is it going to, we see, what we get when we buy and at what valuation versus what it would take for us to go to market with a live product, right? And in most cases, actually, the way we found success is we've actually partnered early on with one of these companies. So we have a good amount of insight into how they run their business, who they are as people, and whether they are able to deliver based on, financial expectations, because obviously a public company versus a private company are two very different things. You have a very visible audience in a public company. So you need to be acutely aware of that in order to, respect your shareholders and provide as much transparency as possible. To answer your question specifically, I would say this is this is a kind of a second half 2022 initiative that we would be entering this market, that secondary market with a like solution.
Very interesting. Very interesting. Joseph, do you want to tackle the blockchain question, both from your standpoint, but also, I guess, from the standpoint of your clients?
Yeah, absolutely. Obviously, as Jordan had articulated, blockchain is a stack of technology that we think its massive value is in its ability to provide confidence in the auditability of an asset, a piece of information. And when we look at things from our lens, we currently fully manage more than 40,000 homes in Canada that fall under the condo residential living or rental residential living. You see some really interesting things. It's when I always say you can go buy a $10,000 Honda Civic, and you can get complete auditability on the history of the car. Has it been in an accident? Has it been serviced? How many kilometers does it have on? But you step up to buy what is now close to $1,000, $1,200, $1,300 a square foot condo, and you actually get very little by way of information. And if you've ever been through that experience of purchasing a condo, you receive a piece of paper, a listing that says, oh, this unit is approximately 1,100 square feet. And then within fine prints, they'll tell you, well, it's up to you to measure that. You got to go and measure the closet. You got to go measure around the poles. Nobody obviously does that. And at $1,200, $1,300 a square foot, you can see why you would actually be wanting to get a real great source of data to tell you how many square foot this building is, or this unit is. You want to also get some real clarity on the history of the maintenance that's been done on these assets. We look at these buildings again as just assets there, but they're often $100 million, $150 million, $200 million assets that you're making a single decision to move your family into, or in the case of a big asset management company, you're making a decision to make that purchase. And there's only so much you can do without getting the history. And if that history sits in people's emails versus sitting on something like the blockchain that's accessible, that's organized and searchable, and for sure with confidence that everything that occurred in that community is available to you, so you can make the best decision on that. I think that plays a big role. And I also believe, and I'm sure that may come up as well, the concept of smart contracts to actually accelerate transactions. I mean, most people don't know this, by the way, but between Canada and the US, there's approximately $150 billion exchanging hands just in condo maintenance. So when you take that number, think of how many small little contracts, agreements, where that cash actually flows. So something like blockchain with smart contract can actually be an amazing tool to facilitate those types of transactions with speed.
So if I look at your product specifically, could you give us somewhat of a timeline and also an action plan on how you would or you could integrate blockchain in your suite of products?
Yeah, absolutely. While timeline is always tough, however, I will tell you that it is certainly something that we are looking at within our lab right now. We've actually partnered with a company called Eli that actually spun off out of our midst. We do not have any attachment to them. And Eli actually built an artificial intelligence platform that's built on top of on top of blockchain to actually provide that level of confidence of historical data about a condo that you're about to purchase. That's actually widely used here in Canada, and well, I should say Western Canada, and it's coming out east. That also helps us with helping our condo owners and councils to actually make decisions around their insurance as well. Because if you have that data, you're likely going to get a better insurance policy. So we actually are driving pretty fast towards getting a solution there to bring that to our homeowners and communities.
Very interesting. So Courtney, I have the big question for you. Is blockchain the next big thing for real estate?
Yes and no. So, I mean, I think what you're hearing here is that there are very specific use cases that blockchain is very, very good at. And, you know, I think like mobile phones, like the internet, you know, there's certain things that we know that will be enabled by blockchain. But I think that once that happens, there's a lot that's going to come from that. And some people are speculating about, but some of it is not known because you can't do it today. And so that's just the way technology works, is we know some of it, but not all. I think that in terms of what blockchain is very, very good for, it's good for high value, low frequency transactions. So real estate, it has some good applications. So accurate current state of title, knowing who owns it and being able to know that very quickly, efficiently, that makes a lot of sense. You know, it actually blockchain isn't designed for search. So querying blockchains are very difficult. So I think that some of the things that we're talking about will include some aspect blockchain, and then it will be connected to relational databases. So I think that it's not one or the other. You know, right now KYC can happen, but that doesn't happen on the blockchain. You can't do KYC on the blockchain because then you're mixing identities with it can be public, right? So they happen, and the blockchain communicates with a secure private database that can connect the two, but that's not public. So I think that some of these things will happen on the blockchain. Others, we have the technology, and some of it is more about opening up databases, sort of laws changing or regulations changing. So, so I think those are two things. I think that tokenization people have mentioned, and, you know, I think you get into that more, but really this kind of speaks to what Jordan was talking about before, whether it's tokenization, securitization, people owning smaller pieces of real estate and being able to participate with smaller dollars and less transaction costs. So I think we'll see those types of things. I think that smart contracts, and we can talk about this more, again, blockchain will be incredible for things like financial markets, trading environments where there's manual reconciliation, that if you knew who is the current owner, it could happen very quickly and automatically. It's blockchain and smart contracts aren't good where there is more room for interpretation. You know, it's got to be very, very clear. Right, today code goes wrong in the real world, and when code goes wrong, that's where the law kicks in. You know, I think that with smart contracts, it will start slowly with things that are very, very clear, because there's not recourse in the same way. And so it's got to be, it can't be on, you know, right now, if there's legal disputes and you're going to the lawyers to understand what a certain term means, you can't just automate that onto a smart contract, right? So I think that there's very specific areas where we're going to see it happen first. And then, you know, be very powerful as Voxtur and Tribe and others start to actually use this in the real world. And, you know, I think that the technology companies can do a lot, but there also needs to be participation from from the government, from register office, from all of the different participants to make this happen.
That's very interesting. And so if I hear you correctly, you wouldn't say that blockchain per se within the Proptech world wouldn't make a difference in terms of the appetite from your clients or from investor in general for that particular product. It really depends on the final product at the end of the day, correct? Like you wouldn't see a specific appetite for blockchain in Proptech, right? Is that fair to say? Yeah,
exactly. Like blockchain is the technology, and so, you know, when we see decks that say we're a blockchain company, you know, or when people come to you selling something blockchain, I would take that with skepticism, and, really think about it. I think that, Jordan was giving very specific ways that blockchain can change their business and be something that's powerful in the short term. But, it really depends on the application. And, we invest at the early stage. And, when we're making investments, we expect companies to exit, within a 10-year period, something like that. So there's a timing question on some of these. So I think that there's some types of blockchain companies to invest in now. And, there's a lot of crypto funds, there's a lot of money going towards these types of a wide range of things. A lot of them, a lot of the ideas won't make sense at all. Some of them are going to be really powerful and really big, but it's both the idea and the time frame and when it can happen. And so some of the people that have ideas today, they might actually be things that are going to happen, but it's a question you kind of have to look at both the question of, is blockchain the right technology for this application? And then secondly, what is the time frame? What else has to happen for this to be accepted? Does that require the law to change? Does it require social acceptance? What are the things that need to happen, and what is the time frame? And so I think that those are getting figured out. And we've talked about blockchain. It's past the peak of the hype cycle, so we will start to see the real applications of it. But you can't. It's not blocked. It's not just about blockchain. It's about each application of it.
Yep.
I think the rule of thumb is if it feels like a solution looking for a problem, it's probably not where you want to put your money.
Yep.
I was just going to jump in on that too. Like if you have to use the word blockchain to describe your solution, it's not the right solution. You're, to Courtney's point, that skepticism is bang on when we have these conversations. Anybody that comes out of the gate with blockchain, it's like, what are you trying to hide? Are you just trying to get with the trend, or, explain to me the problem you're solving without using the word blockchain, and I'll probably have a lot more time for your pitch.
Mm-hmm. No, that's very interesting. Before we move to another interesting topic, fractional investing, Joseph, do you want to expand a little bit on what you see on the ground in terms of what you call yourself city changing patterns, and how do you feel that this could affect or is affecting your business today?
Yeah, I mean, the picture behind me is a real picture of Vancouver. Obviously, anybody that's visited Vancouver in the last 10, 15, 20 years, or Toronto or Montreal or any of the big city centers around the globe, there's a bigger pattern of migration from a single family home living in the suburbs into the city living. Population increase obviously plays a big role into that. But we're also seeing some interesting patterns here in Canada whereby house value has gone up significantly. Mom and dad are empty nesters. It's no longer needed to be living in a 3,000 or 4,000 square foot home. So you sell that for $3 million. I know these numbers are crazy, but that's the reality of where we live in now. And you give each one of the kids $1 million to go buy a condo. And then even the mom and dad move into a condo as well to be close to each other. What this is doing is introducing, and I know we're going to talk about fractional ownership, but this is actually introducing co-ownership, this concept of people moving into these communities together. And it's amazing. And we call it a collisions of human capital, like a lot of great people, great neighbors living in one community. It's a beautiful thing, but it does introduce a lot of complexities. And these complexities are moving at a much faster pace, and actually there is solution providers for these communities. And I'm talking as basic as being able to do the daily maintenance of this community, and as complicated as having a digital strategy for this community, allowing people to book their amenities and allowing the regulations around the city, the county, and the home or the building itself to catch up to the needs of these people. So this is an interesting problem. It's an interesting pattern that we're seeing more and more of. I also do think with interest rates heading where they're heading, I'm sure everybody has an opinion on that as well on the panel and elsewhere. I think you're going to see a big, massive return to rental. And as that occurs, I'm already talking to a number of developers that are looking at some of their projects for the next 2 or 3 years, and they're going to convert, or at least attempting to think of converting these models from a condo model where they're going to sell the home to actually, hold rental for 10 or 15 years. those are also introducing more density in the city. And again, what does that look like when we used to have, 50 homes in 1 square mile or 1 square kilometer, and now we've got 5,000 homes in the exact same space. They still need to drive to go to work. They still need to eat. They still need delivery of services. So a lot more thinking needs to occur in that space. We're doing our part in the communities that we manage. We try to sit with these developers early in the master plan communities and give them a full digital logistical strategy for these communities. I just wish there'd be more and more of that happening at a higher level, especially at the government side.
Mm-hmm. And since I got your attention, Joseph, do you want to expand a little bit on how your client base could be affected by fractional investing? Is that something that you're following closely?
Following closely, we haven't done anything as an organization yet on that front. However, there's no lack of some interesting. I'm going to share some with you some interesting data. People always think of rental and condos are completely separate categories. Most people don't understand there's actually almost 1/3 of condos in Canada are actually owned for rental purposes. So this shows the absolute desire of investors to get their hands on homes and actually go into the real estate market that way. So it's fractional from a building point of view. What Jordan and Courtney are obviously speaking about is this concept of taking this portfolio of homes and actually cutting them even to a smaller pieces and making that more and more available in a cost-effective way from a purchase point of view, which I think it is coming. There's just no doubt about it. I mean, the data shows us that it's coming. The real estate, price shows that it's coming, and it's no longer an option for you to create a diversified portfolio by buying 5 condos in the 5 big cities, because that's a $5 million investment. It's nobody can do that, or not many people can do that. So that's going to definitely be something we're looking forward to putting in front of our homeowners that want to expand their real estate footprint.
Joseph, a timeline on that?
No timeline on that.
Okay.
I will tell you that is definitely a partner versus build or buy for us.
Okay, that's fair. Jordan, I'm sure we were talking about velocity. Would fractional and real estate investing, affect your business in that sense?
Yeah, I don't know about fractional, because I think it's still unknown about what the diligence will be required. Coming back to what Voxtur does, right? We're modernizing that diligence. So, but not everything, for clarity, not everything requires an appraisal, right? There in the valuation of a piece of real estate alone, there's a very wide array of things, right? Everything from a traditional appraisal to, an automated valuation, and then a bunch of things in between, right? How to determine value. So I think there's an opportunity there. I don't know until we see that true adoption what the standard solution will be. Right now, I can speak to, I know what it takes when a bank is originating a loan, or when a bank is refinancing a loan, or allowing the borrower to do a home equity line of credit, right? Or even putting it in default. I know we have all the products for those types of what I'll call traditional solutions. I think we're talking about a more innovative solution and creating a bigger audience, right, to invest in the largest, asset class in the world, which is all positive news. What I'm hesitant to comment on is what the solutions are for that. So how, Joseph was talking about how maybe you get into fractional ownership, and Courtney's probably looked at a ton of companies that are trying to do that, like companies like Proptech. There's companies that are doing that. However, what's the diligence that they're requiring? How are they giving those clients or investors confidence in what they're investing in? I think that's still unknown, albeit an opportunity. So I still love the space, because I think regardless of the investment, there's still a certain level of diligence, right? And we're at Voxtur always trying to create that better, cheaper, faster alternative to do the diligence, right? And I think our competitive differentiator is being independent, right? We don't own real estate, right? There's always a sober second thought, for lack of a better description, that's going to be required or should be required when it comes to an investing. That's what Voxtur does. And we're trying to make that as seamless and automated as possible, because the way of the appraiser with the clipboard, or the tax assessor with a rule, measuring stick, or these large, lazy, non-innovative type, title companies that are monopolistic, really haven't adjusted their pricing, when the risk, arguably due to the technology and the veracity of the data, has gone down, right? And so we're coming in there with an alternative, like I said, modern solution to make these things faster, cheaper for the borrower, and an alternative to the traditional process.
Mm-hmm. Thank you for this. Go ahead, Courtney. I was about to ask you.
I think that's a really important sort of differentiator to sort of call attention to. So, and there's a lot of technology businesses, companies like Dropbox. I don't know. I see it on my computer now. It provides the technology, some of what Voxtur does, and what Jordan's talking about is they provide the tech. Some of these businesses, a lot of the fractional ones being an example, they are doing technology and real estate. So a lot of the decisions they're making are real estate decisions, not just technology decisions. And so there's opportunities and risks associated with that. So I think what's exciting about it is that there's a change in generationally, there's a change in interest, whether people want to invest in REITs or the stock markets, or participate in what feels like a more active way, whether that's buying a home in a different place. So some of these companies in the US allow you to buy a single family home in a small town that you've never been to and have it property managed. In other cases, it's buying, participating in real estate in a specific project or a specific asset with $100 or $5,000 or $10,000. And in Canada, we're seeing more the asset by asset opportunities. So Willow, Addy, Buy Properly, I think Parvis, I don't know how to say it. I think in Vancouver, they just launched. So a lot of these companies have raised $2 to $5 million. In Canada, the market is extremely early. This group is probably is a sophisticated group, and check out one of them. We probably have a lot of people here who can look at the diligence and make decisions themselves, and it's an interesting thing to do if you have some money that and the decision making ability to decide which assets you want to own. But you are relying on, if you're investing in specific assets, you're relying on the diligence and underwriting that's been done. And a lot of them, there's a lot of really smart people that are doing this. I know a lot of people at the companies, they come from, they've got reputable experience, but you have to remember, but you are investing with people who are making decisions. And as they scale that, there's technology that can help them, but it's, this is still the business that we're in. In the US, you're seeing more of the portfolio strategies where, Fundrise, and some of these companies have hundreds of millions or $1 billion in AUM now. So there's, proven there's more years of experience, but again, you're still investing in essentially a real estate company, just, not a REIT, but in a different way. So I think it's exciting. It's interesting. I think we're going to see a lot of opportunity for people to access real estate through it. And that's what's exciting. But as has been said, it's still early in this market, and but it's a cool opportunity if you want to sort of explore something that people check out, one of the Canadian companies.
Courtney, it looks like you're very excited about the asset class. So how would you characterize your current exposure to the asset class today, and how should we view it over the next 12-24 months in terms of Alate per se?
It's a space we're looking at. We haven't made an investment in a fractional company yet. We have made one investment in a very early stage company that's focused on sort of tokenization, but very early how this could work. But Stanford grad, with an idea, so not something that's at the it's not at the scale up phase. It's very much ideas, because we're learning and we think that there are going to be real opportunities here. But for us, we do like to invest, our bread and butter is software as a service businesses that are sort of technology or scale like technology business. So I think that there's a lot of opportunities at the intersection of real estate and technology that aren't necessarily only the tech, but also include understanding and buying or participating in the underwriting of real estate. And so I think that we're excited about the opportunities here, but we haven't made investments as a fund, and we're sort of still learning and working to understand how these companies are going to evolve.
Mm-hmm. Very interesting. I think it goes to say that we need to carve out the real estate conference and do a proper Proptech conference in the future. Only 5 minutes remaining. Joseph, I want to be sure we touch base on access to capital and also your underwriting criteria in terms of acquisitions, the current context.
Yeah, we were busy in January. We raised $21 million private placement led by Round 13 and a number of large funds that were already in our company that came back to continue to support us. So we were very fortunate to see that support from the market. We currently don't have any real major capital requirements. However, we're very active. As mentioned earlier, we are an acquisitive company. We purchase traditional property management companies and we convert them to our service delivery model by unlocking more gross margin and revenue streams out of these companies, by also improving the service delivery model by utilizing our technology platforms. We've made 8 acquisitions to date. Our capital criteria when it comes to acquisitions tend to be, obviously we got a number of currencies. One currency is we're competing often with these companies. So they are looking often for an exit. We use cash, we use some of our stock, and we also have senior debt available to us. That's obviously becoming more expensive daily, the way the Feds are operating right now. However, it's still at really low rates considering the fact that most assets we look at are cash generating. You'll see us be very active again in Canada. However, we think with the acceleration of slowing down in the market actually opens up the door for opportunities for companies like us to be active. We're recession-proof, pandemic-proof. Buildings have to be managed, and whether it's a great market or a tough market. So we're fortunate that way. Our cash position is still strong, and you'll see us very active in that market.
Mm-hmm. Jordan, looks like you guys were spot on the timing, being super active last year. What should we be expecting for this year in terms of your acquisition program and how do you feel about access to capital, given your ambitions, obviously?
Yeah. We were definitely similar to Joseph. We were definitely active last year, rolling up about 5 acquisitions. And the thesis was, again, does it buy, build, or partner? We look at them. We had known these targets fairly well, and so we took an approach that we wanted to build the infrastructure. I think we all have, if you use your iPhone as an example, there's a ton of apps. Well, the banks are no different, right? The banks and these large lenders are trying to limit the number of vendors. And so we took an approach that we tried to create an end-to-end solution for the banks when it comes to their mortgage portfolio and doing a one-stop shop for them, right? And now we've created that. And how I guess, in migrating that, integrating that into a single platform, because what we found was a lot of the data, be it in a valuation, a title, or a property tax business, it's all the same types of data, but used in different ways, right? And so now leveraging a singular database, albeit through different we monetize that data through different platforms, be it a valuation, a title, or a property tax business. And so, we're continuing. Our now CEO, now executive chairman, Gary Yeoman, was the founder of Altus Group, right? Was the initial investor and board member of Real Matters. So he's got a long track record of success in the public markets. But more importantly, and the reason, alluding to it, we're not sitting still either. I mean, you look at Altus. Altus is a byproduct of probably 30 plus. I was there with them, 30 plus acquisitions, right? And so, very well equipped in terms of how do we structure this in the public markets? How do we use our liquidity creatively versus, an Alate who has the luxury of operating in the private world with not so transparent valuations or timelines. And so we've got a lot of experience in that. And so, at the same time, it's definitely the theme from our board on down to, we need to prove the organic growth internally, yet I'd be lying to say if we weren't going to be active in the marketplace, right? We've done a lot of acquisitions. We continue to see them. People are liking the space we're in. Our independence seems to be attractive to a lot of these in the US market anyway, a lot of these targets that we're playing in. And then, like I said, we we have a culture within that we're, it's a very horizontal type structure. And so people seem to be attracted to that, especially in a remote environment, right? And so we're empowering these founders that the party's not over just because you acquire, the party's just beginning ultimately. And so to sum it all up, we have a healthy balance of organic growth. That's kind of, this Jim Albertelli, our CEO, that's his theme. That's what he pushes on a day-to-day basis, while Gary and I, being executive chairman and chief investment officer, are out in the marketplace constantly looking at every opportunity, because, you wouldn't be Canadian if I didn't quote Gretzky and saying, you miss 100% of the shots you don't take.
That's great, guys. So I wish to thank you very, very much. That's all the time we have. But as I mentioned, it looks like we need a carve out of the real estate conference, having a Proptech conference down the road. Thank you so much for your time. Very interesting. And for everyone else, we will be back in 5 minutes for the retail panel. Thank you.
Thank you, Rob. Fred.